Hey everyone, this is Kirk here again at OptionAlpha.com. I'm actually recording this video on Sunday night, and I'm sure that a lot of you are getting it here first thing Monday morning as well. So what I wanted to do in this video is, I haven't done a video in a long time, and I apologize for that. I got some new cool stuff that I'm going to be testing out here soon, some better video shooting material. You're obviously listening to a better version of a microphone, so hopefully it sounds a little bit better than in the past. But what I want to do on this video tonight is just kind of go over where the market is currently and why it's been so quiet really on our end. We had a really good couple of trades. I had the DIA trade, the diamonds, and then the TLT, which is doing really well. A lot of people have already taken off profits on the TLT. I'm holding it a little bit longer. And then the DIAs haven't quite come in yet, but I think that last week was at least a good start to really everything that we need to start trading a little bit more. Currently, what we're seeing is, sans the last week of activity, or last really 3 days of activity in the VIX, and you can see it here on the chart, the nice pop that it had, we really haven't had any sign of volatility. And in fact, a lot of stocks, you go to their option statistics, like you go to IWM and all these guys, when you check out their option statistics down here, the current implied volatility was at 0 or 1 or 2 or even 5% over the last 2 weeks. And so what this basically means is that in its entire history of trading over the last year, the implied volatility is at the 0 percentile, or it's down near 0%. Again, right now it's at 16 from the last little pop that we had, but we still need it to get up into the 20s and 30s before we start really selling puts and calls and call spreads pretty aggressively. Right now, with volatility so low, when you sell any sort of spread or even a naked option, God forbid you even try to do that with volatility so low, you run the risk of being wrong directionally and wrong in volatility. So what we want to avoid is we want to avoid putting on positions when volatility isn't in our favor. Again, high volatility is always the best way to go. So you can always check out this option current implied volatility statistics here, and they have it on Thinkorswim. It's very, very easy to use. Some of the other ones that I was taking a look at are like XLF. You can see that's at almost 9% right now, and that's the financial sector. XLE, a little bit higher, I believe, than XLF. It's about 20% right now. That was, again, down into the teens. So XLE is looking really good. Some of the other ones that have popped really good recently are things like gold and silver, which have had some huge runoffs. You can see gold right now is in its 31 percentile. So it's actually seen a pretty good pop in volatility. I'll just take you to the chart real quick and you can see it. Again, volatility is always charted down here below in green. You can see with gold, we had weeks and weeks through December and February of low volatility below 15%. But as the market started to sell off here, we've seen a pretty good pop in volatility. So this is when we want to start nibbling into trades, right? I don't think the gold sell-off is done, but as soon as it starts to find a little bit better of a base, this might be a good opportunity to sell put spreads, even sell naked calls with such high implied volatility over the past year. So that's really what I'm looking for right now. Anything else is pretty much pure directional play. I do think that the financial sector in general is going to have a tough time here. It's had a hell of a run up, but it's starting to show signs of weakness. I mean, this just can't continue forever. And even things like Goldman Sachs, Goldman Sachs, even things like Goldman Sachs have had a huge run, and we're starting to see slow signs of profit taking. Hasn't been that dramatic just yet, but I do think that we could see a pretty good sell-off here in the financials. Again, going back to the major indexes, IWM had a real tough time, mainly led by some of the technology guys in the industrials. Haven't seen the pop in volatility yet to get uber excited about any, again, call spreads or short puts or short calls. I really think we should just wait and see what we have here coming into March, or end of February and beginning of March, to start putting on positions. So as always, we'll continue to watch things and monitor. Have a really good position in TLT right now, which is working out pretty well. It's got a pretty healthy profit right now, but I think considering what's happening with the change in bonds and stocks, so more investors rolling out of stocks and into bonds, buying up bonds, I think that this still has much more room to go, and therefore can land us a bigger profit considering the less amount of trading that we've done over the past month. So as always, hope you guys enjoyed these videos. Please email me with your questions, comments. Currently, right now, what's working good are directional plays, so 50-50 bets, really, just to keep you active. And then also some butterflies are actually working out pretty good if you can find any of those. Haven't been able to find any for the trading service. I had one on from back in December in my own personal account. That was just a small one that I was testing out, so I didn't send out that alert for that one. Just testing out some different strategies with butterflies, but that may be something that we will be sending out here shortly. Especially in these low volatility environments, butterflies might be a really good way to take advantage of some further increase in volatility whenever it comes. So as always, hope you guys enjoy these videos and happy trading.